Hello and welcome to today's edition of Charting the Markets. With me, Sean Murison, Senior Market Analyst at IG South Africa. Today's economic calendar is quite light, but we do have that final revision of US GDP, that's first quarter GDP. We're expecting that figure from the preliminary to go up to 1.4% from 1.3%. That's quarter on year. We also do have that weekly unemployment claims data out, and that's early afternoon. Let's look at some charts. And starting off with the US dollar basket or the dollar index. At the moment, we're still sitting in that short to medium term sideways range-bound environment on the dollar index, although we still consider that longer term trend bias to be down. So considering that trend bias, we've only been looking at short positions on the US dollar, but trading off levels. At the moment, what we see is we've had a bit of a rebound after a false break of that 101.85 level. We're moving towards that 103.15, and we're looking for a bearish reversal for short entry before this 103.15 level, in which case we start targeting a move back down towards 101.85. Now, if you are a bull and you are bullish on the dollar, we're thinking that, we want to see that longer term trend bias change, and you want to see just that move above that 200-day simple moving average. So if we don't get a reversal, we see a break above 103.15 and a move above that 200-day simple moving average, the blue line on our chart, then we can start considering trading in both directions, because I don't think that automatically assumes a new uptrend, a break of that 200-day simple moving average, but it does mean that that downtrend is broken. So we'd still be looking at trading between the levels, but we'd be more forgiving on taking long trades on that dollar basket. And if we do get a break above 103.15, then our next level of resistance is sitting somewhere at about 104.35. Looking at the euro dollar, what we have here is that we've got a longer term trend, which is still considered up. We also do have that short to medium term sideways type environment on that euro dollar. But in the very short term, there's a very definite range. Market's waiting for a bit more direction. And that range is sitting between 1.0800 and 1.0990. Now, if we get an upside breakout, we'll be looking at possible long positions, targeting a move to initially to about 1.1065. Now, on an upside break like that, you need to use a bit of discretion as to where to put your stop, perhaps below a one-day low. Might be a consideration. Now, in the event that we don't get the upside break, we do get the downside break, our preference, while that longer-term trend bias is still considered up, is rather to wait out weakness in that euro dollar and look to see if we can get a bullish reversal somewhere lower down, closer towards support, or that 200-day simple moving average. 200-day simple moving average sitting at 1.0730 at this point in time. Now, moving on to cable, longer-term trend is still up, and I'd argue that over the medium term, that trend is also up as well. In the short term, we are having a bit of a correction of that trend, and we have broken support at 1.2665. So keeping in line with the trend, we're not looking at shorting, although we do consider a move is possible towards 1.2543. And if we break below that, even 1.2345. But our approach here is waiting for that price to reverse, show some signs that the correction has stopped before looking for long entry on cable. And we start targeting those levels higher. And that recent high there at about 1.2840 might be one of those considerations. And if we start trading below that 200-day simple moving average, we consider that longer-term trend to be broken and no longer up. But we're still quite a way away from that. So still sticking to long bias to trades on cable at this point in time. So moving over to some indices now. Starting off with the S&P 500. Now, we've also had a bit of a short-term correction of a longer-term uptrend. We had this pullback here. Previous weeks, we've talked about this move higher getting a little bit overheated. We have these accelerating trends, and that was suggesting what we call a price blow-off in technical analysis terms. That correction has started. It's taken to our initial trend line. It hasn't been as deep as maybe would be preferred, but certainly we've had a short-term pullback from overbought territory. That price blow-off did well in predicting a short-term correction, but longer-term trend is up, and so we've been looking at keeping a long bias. Now, this correction does look to have ended with this bullish candlestick pattern here, which is a bullish engulfing candle pattern where my mouse is right now. And so we are moving higher. And our next target on the upside is 4,450. I think if traders who are long, initial stop might have been somewhere below this reversal low here, about 4,430 odd. It's not labeled on the charts, just above this horizontal level here. This reversal low I think if you have had a bit of a move and you're fortunate enough to catch it at a good level, maybe trailing that stop loss a little bit higher might be a consideration, maybe to about 4,350 odd. We are trading near highs, so we do want to be a little bit more cautious on our trades, but certainly we're not betting on any tops at this point in time. When we see an overbought market in an uptrend, we're just waiting for a weakness to play out and trying to join that trend. And we do have that reversal in play, the short-term bullish reversal in line with that longer-term trend. So 4,450 being that initial upside target. Now the DAX, short to medium term consolidation, but longer term trend is up. That consolidation or that sideways range is sitting between levels 15,715 and 16,330. Now, in the past, that 15,000 was actually a level of resistance. Now it's been acting as support and it's proving itself as support because we've had a few tests of that level. Now we do look like we've had a bit of a reversal off that level. So we could be looking at a bit of a range trend with a long bias to that upside with that longer term trend up. Again, we've got that price firmly above that 200-day simple moving average, supportive of that and targeting a move back towards 16,330. I think traders who are long might consider just having a stop loss and a close below this support level 15,715. And as we tick higher, maybe trailing that stop loss just below a 1 or 2 day low. And that's really dependent on your threshold for risk. I think 1 day low might be sufficient as long as they're not short bodied candles. Now the FTSE 100, the picture is very different to what we're seeing on those other indices. Our long-term trend bias is not up or down, it is sideways. So the market is grinding sideways, and we consider that when we see the price whipsawing back and forth through that 200-day simple moving average, which has happened a few times. Now, in that type of environment, when we're trading the index, we do look at trading between the levels of that, looking for reversals of support, reversals of resistance, so reversals of support for long entry, reversals of resistance for short entries, or alternatively breakouts, so closes and moves above levels of support or resistance, or above support, above resistance, targeting the next level higher, and below support, targeting the next level lower. At this point in time, well, last week we looked at this downside breakout. We're talking about downside breakout. We've tested that support level 7,410. Now we've had a bit of a reversal. This long wicked candle here showing an intraday reversal, and there's seen a bit of follow through. Now we are getting closer towards that 7,560 level, which is that level of resistance. And what we're looking for is a bearish reversal before that for short entry, in which situation we target and move back to 7,410. We could be forming that bearish reversal right now. We have this bearish Harami type candle pattern here. And to confirm that, you want to see this red candle closing below the halfway mark of that green candle. Now, it is a little bit short of that resistance target, which is fine. But if you are looking at trading this type of reversal, maybe having a stop loss and a close above this that intraday high, sitting at about 7,520 odd, might be a consideration for that. Just keeping a little bit of a tighter stop whilst targeting me back towards that 7,410 mark. Moving over to some commodities, starting off with Brent Crude. Now, our bias here is still to the downside. Price firmly below that 200-day simple moving average. Again, our blue line on the chart. Short to medium term, we have consolidation within a consolidation. So it can be a little bit frustrating at this point in time. But again, trading between the levels, but keeping a bias to the short side. So when we start seeing oversold rebounds and that, we're not interested in trading in that. We're waiting for the price to find resistance and reverse near resistance to align with that longer term trend, with the assumption that we're going to see short-term declines to support. Now, at the moment, this 7220 level has proven to be a level of support. We've seen quite a lot of action around that. The market does seem to rebound off that level quite a lot. But we see these highs here are getting progressively lower. So if we're looking for new short entries here, preference here is either to look for a downside break, close below that 7220 level before targeting these lower levels, $70 a barrel and $69.5 a barrel on the downside. But at the moment, we're in a little bit of no man's land. And certainly if we're looking at a trade like that, if it does come to fruition where we break that support, maybe having a stop loss above that $75.10 per barrel mark might be a consideration. If we don't get that close below and we see a break above 75.10, we'll be targeting a move towards 77.20 and possibly 78.50. But again, we wouldn't be looking at long, and that because of that longer term trend bias. We'd be waiting for this price rally to end and looking for a bearish reversal. Just a candlestick, price just ticking back before looking for short entry once again. That's all the way until we see this price start moving above that 200-day simple moving average, which is around about that $80.80 per barrel mark. Now, gold continues to grind lower, and this longer-term uptrend is now going to be questioned, or it certainly looks like it's going to be questioned relatively soon. So that longer-term trend is up, but we've had this short-term correction persisting, and we are grinding lower and lower, and we're very close to that, sitting about $1,895 per ounce is that 200-day simple moving average on our chart. Now, I think if you are still looking for long entry, you might want to see at least a break above this downward trend line just to say, well, the price has now started ticking back and started pushing higher. I like to use a close above as a filter rather than just wait for an intraday move personally. Not everybody's preference. If you're looking for extra confirmation, maybe even a move above that 1945 before targeting 1980 and possibly $2,005 per ounce. Now, we start drifting below that 200-day simple moving average and closing below, we can say that longer-term uptrend is broken, and we need to reassess our trend bias on gold. But that hasn't happened yet, but it does look like it could happen quite soon. And our next levels below that are sitting about 1875 and 1855. And again, if we do break below that, we're not assuming that that longer-term trend is now down. We're just assuming that the longer-term uptrend has been broken. And so we could be moving into a bit more of a grind, a bit more of a sideways consolidation. Again, we're looking at trading either long or short off levels and between levels. And the next level of support here, sitting at, further down, if we break below these levels, sitting at about 1,805. Now, to me, this marks a major low. And if we started trading below that, that's when I'd say, okay, well, I think that downtrend, a new long-term downtrend may be forming, and we could start thinking about having a short bias to trades on gold. But at the moment now, we're pulling back, seeing if this longer-term trend holds up. Otherwise, we're looking for bullish reversals of support for long entry, or alternatively, a break above this trend line and this 1945 level for long entry, just to show some upward momentum. Now, still with the precious metals, although obviously also very industrial in its use, platinum, quite reliant on the automotive sector. Now, very interesting, this chart, we see the price been trading back and forth through that 200-day simple moving average, suggesting that that longer-term trend in the direction for platinum is actually sideways. So although we are below that 200-day simple moving average, we can see that we're still holding up on major lows at this point in time. Now, we do look like we could be getting quite close to setting up for a rebound on platinum at this point in time. We are hitting a major level here at $905 per ounce, but we don't have confirmation. Yesterday, we bounced off that level, this longer wick, but it wasn't that strong. We want to see a strong close. We want to see this candle close at least above the halfway mark of that preceding candle, or even above that high, just to show the price has stopped falling, it's ticking back, in which case we'd start targeting, move back towards that $980 per ounce mark, and we could look at that reversal low as a possible stop loss indication for that trade. But platinum certainly looks like it's getting towards a level at this point in time, and we do consider, even though it's down for the year, short to medium term trend is down, that longer term trend is sideways and does suggest trading off major levels, and we are at 1 at this point in time. Right, that's all the charts from me. Shaun Meersen, Senior Market Analyst at IG South Africa. Thanks for watching.